Good morning and welcome back to another pipeline trading video. As you guys have probably seen in the news, the markets are coming down a bit and we're going to be seeing some more volatility. It looks like I was right with the US bonds, unfortunately, the 10-year yields. Those right now are looking like they want to push through this order block and continue to make a leg up. So we are expecting a potential call it a 4.96 to 5.08 run. If we break through this order block right here that you're seeing right now, that's a really big wick. And that is not good for the market. So you're going to see the markets take a bit of a tumble here. Not to say that it can't rebound, but if these yields go high, and the inflation fears continue, then expect more downside in the overall markets. If we go to the Qs, you're seeing right now we're going to open a gap down, and we're going to see where we're going to find support. Is it going to be at, and again, the S&P ETF is what we're looking at. This is the SPY, and the bottom is the QQQs, which is the Nasdaq. You're going to see a potential support level of 732 area, or we come down and fill the gap to 722. Nothing catastrophic, but if this continues to go in the direction with the yields and the inflation numbers, and there's any more bad news that potentially comes out, then expect these target zones to potentially be next. If we go to the semiconductor, we're starting to see, again, a gap down. And it's too early to say because the market's been hot. Earnings have been really good considering the circumstances with the market. And again, can we come back down here to 530 to fill the gap? Yes, absolutely. But at the same time, I'm going to wait to see if things die down because they are looking like they will. You saw volume pick up with this red candle right here that sold off pretty heavy, and then it got bought back up real quick. So I would watch these levels up here to see if the volume starts to die off to the upside. Then that's a good signal that we can make it. But also, like I said before, don't do what I did with the Intel short. Give it time, let it confirm. You want to start to see it cross and break some key levels. If it broke the 20-day and it closed below, then yeah, you know that 471 area is going to be the next target for the if you're looking to short the semiconductors ETF, or if you're looking to buy it back. So one of the areas that would be a good buyback if you're going to buy the dips would be about the 430 level where we broke out of. We never really came back down. There's one, there's 2, 3, there's 4 gaps, and there's a lot of liquidity down here. So those are major levels that I would be looking at if I were to go long. But in this market, I'm not long right now at these levels. Oil continues to hold up, but in my opinion, it looks like it's dying down. Oil, there's no volume. I shouldn't say there's no volume. It's hard to see with the way it's set up. But right now, oil's below the 20-day moving average. And that means that this could be an A, B, C to the downside. And we could stay in this wedge. So if you were to look to go short oil, you would be looking to cover around here. And if it were to break, then it would go down. But right now, there's too much uncertainty in the market. And this is literally 50-50. So this isn't a play, but it's something to keep an eye on because if oil does break out of this and spike up and follow this 1, 2, 3, 4, 5 fib, then that would again would be trouble for the markets. Gold is selling off, and I know a lot of people are probably thinking gold's going to be coming back down here, and that is a possibility. But for me, I don't know. Gold still looks like it has a potential of making one leg up higher. We just don't know when that is. If it breaks these levels, look for the 200-day support at about 4,333 or lower to this level right here, which is 4,267 to 4,191. If we go to Bitcoin, Bitcoin had a bit of a sell-off, and this part's tricky because we have no volume on this sell-off, which is bullish still. So could we break above this channel? From what I've been looking at and how close everything is together, being above the 20-day moving average and holding it is bullish. So could we make another run up to 85,360? Absolutely. But we're still on that bear flag. So keep an eye on that. This is on the weekly. And another thing that I want to point out is if we go back and we were to look at the last one, this is why I like the Gaussian channel. I don't trade off of it. It's just to give me an idea of where we are on the down move. This would be the shortest red Gaussian channel that we break out of. Could we go to the middle of it, which was 97, and then sell off? Yes, because remember, we can get a massive spike and then a sell off, and we have to break above the 97 412 to basically void this bear flag. And if I were to go back over here, it could be something like this that we're in right now, where we could get another spike up. Because this was a short one. We went down, got above the 200-day, and then made a move up, and then came back down, and then found this is the bottom, right? This is our double bottom. So we are above the 200-day. That is a possibility. But at the same time, it could be they could be getting shorter. I also keep that in the back of my mind because we live in a different world today. You have BlackRock and Vanguard, and you have massive, massive, massive funds that are holding this and have ETFs and they have retirement accounts. So for things to sell off, it would have to be through dark pools or derivatives, things like that. It's not going to be like there's no volume on this sell off, which is still bullish, right? We had the volume over here, but that also is something to keep an eye on because when you're going up and there's no volume, that's not good either, right? So remember, in a bullish market, prices rise, the volume rises. Volume has not rised on the weekly. If I go to the daily, maybe it's giving a different. You saw a little bit of a spike, but you could see, look how high the volume was on the selling. So that's distribution. You did have some buying pick up over here, but at the same time, like see the way the Gaussian channel is green and that looks like it's bullish. On the daily, we haven't gone above the 200-day moving average. So that's one thing that I would want to see is us get above the 200-day moving average, hold it as support, make a leg up, and basically have, if we took out this order block at 97,000 and then get support back here at 85, the 85 would be the bottom for another leg up. That's what I would be looking for just off the top. Again, this is still early, but these are things to be thinking about. Or we might get a whole pullback down here and it might bottom at around 67, 795 before doing so if it holds up with accumulation. But right now, one of the things that I watch, because this is a massive run and this is what you have to be worried about. Right here, you can see we came up, it was green. We got above the 200-day moving average. We didn't break above this 52,000. And this is, again, going back to 21. And then we look how much of a drawdown we had. So be careful for something like this. And look, you could even see, this is why I like to point this out. You had volume pick up here, which is great, but then you had volume die off on this run up. So if you look over here, we might get a bit of a push because we had volume pick up yesterday. And just the volumes on it's descending. So there's a lot of liquidity. If we get a sell off and we take out the 75,000, which is the 50-day moving average, expect this to make its leg down, potentially to 53, 54. The head and shoulder measured move brings us down to 49,501, which is a big level because this is a level that we hit before we made our run up to the 100,000, because this was, if you remember, 68,000 was the high in 2020. So I would expect somewhere along here to be close to the bottom of Bitcoin. Maybe it goes a bit lower because it can have a massive sell off. Keep that in mind. If things heat up and there's worry, like look at these fair value gaps. Doesn't mean they're all going to get filled. I don't think we're going down to 30,000, but could that happen? Yeah, absolutely. It all depends on the conditions on the market and what's going on in the world. So you go to ETH, we're seeing the same thing. These are, again, targets that I'm watching for us to come down. I'm still short with BMNR, which I'm using for ETH. And this looks like it wants to make a leg down first. And you could see it looked like we're going to break up and hold this descending line that I drew in. And you could see, like a lot of people think, oh, the bottoms are obvious. Well, you're seeing that they're not. If you're going off of trend lines, we broke above it and we were holding above it with this candle right here. I'm going to see if I can zoom in so you could see it. We got a nice wick and a buy up on the 20-day moving average, and we closed above that descending line, which is bullish, right? If it's overall, that means that the trend, you're looking for it to go back up. But just like I said with Bitcoin, for all of this to be invalid, for us to be saying that we're going to go and make all-time new highs, you would have to break above this level over here. So you'd have to break above 3,347, come down, hold a level over here as support, and then, yeah, you're off and you're running, right? So also, just because of the year and the 18-year cycle, the other thing that you have to be cautious of is we could do what we did in 21, where it looked like it was going to go make an all-time new high because everybody was, bullish. Optimism was high. And look at the order blocks up here. So we might actually get somewhere up here down the road this year, but not actually make a new high. And that's something to also be cautious of when you're doing that. Or, don't don't be married to your thesis because things will change. So right now, watching this, I'm going to see if we break this level. If we don't, I'm going to close my short and try and re-enter up here. But if we do break this level, I expect us to maybe do a secondary test, see how we hold up at 1727, or this diagonal line, which is connecting all the bottoms. And that would put us potentially low. Like, look at the liquidity down here. So that's a lot of liquidity. Those are a lot of order blocks. And if we do come down here, I would expect a pretty big buy up. And then I would say, yeah, for ETH, the bottom's probably done and close. And what's interesting is if you were to do a measured move, if I were to draw a measured move from this channel break, Look at where it takes us. 1450. So this is looking like ETH is front running Bitcoin on the downside and things will pick up. And again, this is why bottoms and bullish markets, like when you see things going up like this, everybody automatically assumes the market is bullish. But this pattern right here is still bearish. And that's not what you want to see. You want to see when we do come down here, things to chop sideways or descending. Then okay, that's not bearish, and it most likely is going to go to the upside. And if we go to BMNR, this thing, is basically giving away all of its gains. So the reason why I'm watching BMNR, if you remember, guys, I sold the $2 calls on BMNU for 55 cents. So it looks like today we're going to take all of this out, potentially get down to 187. And my calls that I sold are worthless. Those were the ones I did the video where just by me holding a little bit longer, and you could trade them too, guys. You don't have to do what I did. But because I got paid such a high premium, and there's a bigger spread, for me to buy it back, for whatever reason, the market makers, when I put my order in over the last few days, BMNU was down to about 182. So I tried to go buy back my calls, the cover calls that I put in, for 2 cents. And basically, I got a call by the brokerage saying it's invalid. We're not putting the order through. And they didn't really have an explanation for me. So if anybody knows why they wouldn't cover that low, I don't understand. Because at one point, there were no bids at all. I was the only bidder to buy it back because I saw this run coming. So I would have liked to just get out of it, and then I could have potentially sold more calls. The reason why I was looking to sell more calls on this, if I bring you to the option chain, you can see. Let me pull this up real quick right here. You can see we have 29,000. This started at 16,000 and this was 16,000. So that was giving me an idea, okay, if the buyers come in, are they going to do a bit of a squeeze? Because typically, if this were to close above 2, all of these people like myself that either bought, sold calls would have to then buy the stock at $2. So if this went to $2.50, that would have squeezed everything to go higher. But this gradually picked up, which then made me have more conviction that there's more. This is going to expire worthless today. I'd be very shocked if it didn't. Anything's possible, but with the conditions of the market this morning, I don't see this closing above $2. So I'm going to let it expire worthless and save myself a few $100 on covering it. Intel, that was a good call. I was early. So what I'm doing, guys, so you understand this, I'm watching the 1 hour. There's liquidity down here. We're descending. Could it go back in and make a move up here? Yes. If it does, I'll be re-entering my short. But this is a good example. I know you're probably thinking I should have held my shorts. But if you remember, I covered the shorts. I think it was about $9.50. So even with yesterday, just so you could see this, with yesterday, I had June 18th puts at 110, and you could see they're still at 875. That's because of time decay. So maybe today they will be at or above the level that I covered. So that's, again, another reason why I wasn't thrilled to hold on to this, because if we do chop sideways or we do get this filled and then go back up here, those options are going to continue to drop in value. So what I would be looking to do is potentially buy them more in the money with an 80 delta. And the reason for that is, yeah, the premium I'm paying is more, but if you break it down and you understand the prices for the options. You can even push it to an 85 delta if you wanted. You're actually paying less for that option in the long run because it has less time decay. So keep that in mind. I was way too early, but the call was right. And that's why options aren't for everybody. It's typically a good hedge. And selling calls are great. Selling puts, if you have an idea where you'd be comfortable buying this, that's another video that I put out a while back that everybody should go look at. Because you could sell, let's say I like Intel at $100 a share. I could be selling the Intel puts at $100, collecting, just to give you an example, let's do this on a 7-day, May, $100. Where are we? Okay, right here. So, as an example, if I were to sell a put at $100 strike on Intel, I would collect $1.11 for every share. So remember, one contract equals 100 shares. That's what I would be getting paid. So I would be getting $111 to sell one contract. And then what would happen is, it's like insurance. If the stock by May 27 closes below $100, I'm obligated to buy the stock for $100. But theoretically, what you can do is you could just roll it to the next week, because the next week is paying a $2.07 premium. So let's say those puts that you sold, let's say they appreciate and they go to 150, and this goes to maybe 230, 240. I could still roll it. So basically it's all in one sequence with the brokerage. They're going to buy back my $100 puts that I sold for May 22nd at $1.50. And they're going to give me the premium of the difference. And let's say this went to $250. Then I collect another $100 on top of that. And I keep rolling it. And that's if you don't want to buy the stock. But this is a good example on where if you did want to buy the stock and you have a level that you're comfortable with, by doing so, you will never pay retail prices for a stock that you like. So if you have any questions or want me to do anything on that, write in the comments below or message me, whatever it is, and I can help explain that. Or maybe I'll just do a video on solely selling puts, because I already did videos on selling calls. So you could see how even if you own shares and you're long and you have it at a good price, you could still sell it at a future price, at a future with a future expiration. And if it doesn't go above that price, then those contracts expire worthless. If they do go in the money, you can always roll them, which is what I was looking at doing if I got stuck in this state at 202 as an example. I would basically be buying back my calls. I'd be buying the calls to close for $2.02. And then I would roll it into the next month. And I think the premium for the next month was about 45 cents. So essentially, I would be getting paid another 43 cents, because that's the difference. 45 cents minus 2 cents is 43 cents that I would be collecting, and that would go to the next month. And you could just keep doing this until your stock hits whatever target you have. But you got to be careful of not being too far in the money, because then you're going to have to go to a much further date on your expiration. So keep that in mind. Tesla's going to pull back. I'd be looking for support at about 398 to 409. And that's also, if it holds at this level, that is somewhere where you could go long and potentially go up to fill this gap at about 474. So that's another play to keep an eye on. So if you found this video helpful and you want more videos like this, please support the channel. Subscribe, hit the bell notifications for more videos. Leave comments, like, and let me know your thoughts. As always, stay disciplined, trade with intention, And God bless you all. Make it a great day.